Okay, good morning and welcome to the January 28th meeting of the Audit Committee. Roll call, please.
Audit Committee member Ed Khachadurian is absent today. Tom O'Shaughnessy,
Present.
Alex Parajon,
Present.
Vahik Saturian is absent, and Chair Zare Amirian.
I am here. Let's move on to the business agenda, please.
Report of the recording secretary, posting of agenda. The agenda for today, January 28th, 2019, Audit Committee meeting was posted on Thursday, January 24, 2019, on the bulletin board of outside City Hall.
Thank you. Oral communications, I have no cards in front of me. Let's move on to item number 4, please.
It's the approval of the minutes of the special Audit Committee meeting held on October 29th, 2018.
Okay, let's take a look at this. Do we have enough? It doesn't appear that we have enough members to approve these minutes because committee member O'Shaughnessy was absent. So let's go ahead and table number 4 and move on to item number 5, please.
Number 5 is action items, and there's none.
Okay, 6.
Number 6A, internal audit activity report as of 12/31/2018. Jessie Zhang, internal audit manager.
Good morning, Mr. Chair and members of the committee. My name is Jessie Zhang, internal audit manager. This morning, I would like to provide you a report on internal audit activities for the quarter ended December 31st, 2018. The meeting materials has been preloaded to your iPads, so if you have any issue viewing them, please let me know. And I also brought up the activity report on the big screen for the audience to view and follow along. As outlined at the beginning of this report, there are a total of 7 sections that include project completed, project currently in progress, continuous auditing project. We have 3 sections that cover quarterly follow-up activities and the status, and lastly, the team assignment. So for this past quarter, we have completed 2 performance audit projects, and we prepared 2 PowerPoint presentations this morning. The first audit is completed by our senior internal auditor, Natalie Minami Valdivia. This audit is about the refuse collections revenue, and I would just to remind everybody, please keep in mind that the scope of this audit is focused on the collection of the billing of fees and the recording of revenues. So with that, I would like to invite Natalie up to present her audit to you.
Good morning, Chair Marion and fellow Audit Committee members.
Morning.
My name is Natalie Minami Valdivia, and I'm a Senior Internal Auditor within the Internal Audit Department. And I'm here to present to you the refuse collection revenue audit that was completed on December 21st, 2018. This audit was conducted at the request of the Public Works Department and Public Works Department Management, and was included within our fiscal year 2018-19 audit plan. The objective of the audit was to review the refuse fees invoiced and the related recording of revenue to determine if they were being performed in a complete and accurate manner. The scope of our audit was refuse collection fees or revenue billing and recording processes for the fiscal year 2017 and 18. In order to accomplish our objective, we reviewed policies and procedures documents, including the regulatory requirements, the citywide fee schedule, the commercial contract, and relevant Los Angeles County Sanitation District fee schedules. We also conducted interviews with Public Works Integrated Waste Management staff, GWP staff, finance staff, as well as the city attorney's office. Our third process or methodology, the third thing that we did was we also performed test work on the North Star billing system, which actually we invoice our routine refuse fees through, and also the soft pack routine bin and non-routine billing system. Just as a little bit of background, Integrated Waste Management is one of the 8 divisions within the Public Works Department. And Integrated Waste Management is responsible for the collection, transportation, and disposal of solid refuse within the city of Glendale. There are a number of criteria used to determine the refuse collection fees to be assessed, and this includes, as you can see in the slide, the location type, which there are 4, residential, commercial, government, or miscellaneous. The category codes, there are 16, that include single-family residential, multifamily residential, commercial, and small business. And then there are also determination based on the number of containers that a resident has or a customer has, and the size of the containers, being 64-gallon, 100-gallon, 1-yard bin, 2-yard bin, 3-yard bin, and then the number of weekly pickups requested. So just as an example, we chose the most simple category or location type, which is the single-family residential. So as you can see, it is the location type is residential. The category is single-family, and then you can see that it varies by the number of containers. In the first example, there's 1 container, and if it's the standard service, a single-family residential property has a 100-gallon container. They receive a standard fee of $18.34, and then they have 0 additional fees, so making their total fee of $18.34. But that same resident, they can also request 2 containers. So in the second line item, there are 2 containers, in this case, 2 100-gallon containers. So they are assessed the standard fee of $18.34 and an additional fee of $18.34. So for a total of $36.68. Another possibility is that a resident requests 2 containers, however, one being a 100-gallon container and then a reduced size of a 64-gallon container. So in that case, the standard fee would be the $18.34, and then for the smaller container, the $11.72, making their total fee for that month $30.06. So as you can see, there are many components. Like I said, there are 4 different location types, 16 different categories, and then many different sizes and frequencies of pickups. So the refuse collection fees, revenues are generated based on fees that are invoiced to residential and commercial customers. The fees charged to customers are based upon their account, like I said, the account category, number of containers, bins, and pickup frequency. When a residential or a commercial utility customer has an active electric meter that is invoiced through Glendale Water and Power's North Star system, their routine refuse services are also processed through the North Star billing system in a consolidated invoice. For non-routine services or large-scale customers, for example, multifamily buildings with 5 or more units or commercial properties with refuse bins, those invoices are generated by our Integrated Waste Management Division through the soft pack billing system. So this table summarizes the refuse collection fees and services in the systems that they are invoiced through. So like I said, North Star for the routine rubbish, and then for the routine bin and the non-routine requested services, they're invoiced through soft pack. And the refuse-related fees, they are established by the Integrated Waste Management Division, and then they are included within the City Council-approved annual citywide fee schedule that's submitted to City Council as part of the budget process. The refuse, sorry, let me move on to the next slide. Based upon our audit, we identified 10 opportunities for to improve the accuracy of the refuse collection, billing, and revenue recording. As you can see from the slide, there were 3 that were categorized as priority 1, 6 that were categorized as priority 2, and 1 that was categorized as priority 3. And additionally, we had 1 innovation opportunity identified. So then I'll move on to our audit results highlights. For our first observation, in order to determine if the refuse service fees were being appropriately invoiced, we sub-selected from the single-family residential refuse fees that were invoiced through North Star, and we compared them to the inventory records that were included within our soft pack system. And based upon our review, we identified that about 6% of them had discrepancies between the refuse fees being charged and the container inventory that was assigned to the property within the soft pack system. With further inquiry, we found that half of these discrepancies were a result of there not being any inventory recorded within the soft pack system, and this was as a result of when we implemented the new soft pack system, the complete inventory was not carried forward into the new system. Sorry. I guess I can click. So basically what we recommended is that we go through and we make sure that our refuse and container inventory are reconciled. So what that means is we will need to go out and do a complete inventory of our refuse containers that are out at each of the property locations, and then reconcile that to our North Star billing system. Sorry. And then for our second observation, it has to do with our citywide fee schedule. The rates established within North Star in the South Pack billing system, we found that there were a number of them that did not agree to the citywide fee schedule. Some of them were, for example, 23 of the fees that we had are for roll-off rental and or services that we no longer provide within the city. And 5 were fees that are established by the Los Angeles County Sanitation District or outside agencies that we don't have control of. So although our citywide fee schedule was not up to date, we found that we were charging the correct rates according to the LA County Sanitation District. And there were some charges that we could not locate within the citywide fee schedule as a result of the evolving process. For example, in the earlier days, we didn't provide the containers to our residential customers, so you went to an Osh or a Home Depot and you purchased a container and you put it out on the curb. So through providing those refuse containers, other services became available, such as steam cleaning them, and so we used a kind of a default billing code or a billing fee for those kind of services. So our recommendation was that we just go back and make sure if we're going to use that fee that it's adequate to cover our expenses and that we detail exactly what that fee is for. So again, the recommendation was that all refuse-related fees should be included within the City Council-approved citywide fee schedule. So they will go through on an annual basis and review the citywide fee schedule and review it against the billing codes that are included within the North Star and the soft pack systems. Oops. The next observation is related to the billing code, category code, and location type. Like I mentioned earlier, there are the different categories that are the criteria for how our refuse fees are billed. When we took a look at those billing codes, we noted that there were some mismatches between the billing codes. Primarily, like I said, in the example for the standard or the routine billing, we have rates for the standard service for that first minimum refuse fee, and then if you ask for any additional or extra services, we have a column for a billing rate field for the extra services. And what we found is that there were some inconsistencies in the billing codes that are being placed in each of those, the standard in the flat rate for the extra, or vice versa, the extra billing code field had standard billing rates within it. So our recommendation was to implement controls to ensure that the North Star customer accounts are accurately billed, and we can do that by working with our utility business system support team, and they can run a quality control report to identify those billing codes that are in the incorrect billing field. Moving on to the last observation that we'll highlight is related to non-routine refuse billing. So in the case that a resident calls in and they request, for example, an extra non-routine service, like if you're having a party and you've done some cleanup and you'd like integrated waste to come out and pick up your trash an extra time during the week, that would be considered an additional non-routine service that would be billed through our soft pack system. I guess I should also mention that there are also non-chargeable non-routine services. For example, if you wake up on your trash day and you realize that your trash hasn't been picked up, you can call into our integrated waste management office and let them know, I've noticed that my trash can was missed. In either case, our customer service staff at the integrated waste management office will complete a work order that's entered into the soft pack system that would be given to the supervisors and be dispatched to drivers in order to complete. In order to complete, and if those services are, those services to be completed, and once they're completed, they would come back into the integrated waste management office and they would be closed, and that would initiate the billing to those customers that would be billed. But we should note that it's a little more complicated in that for those customers that are not normally billed through the soft pack system, those customers would be charged in advance. For example, if you were to call in and ask for a bin rental, our customer service staff would ask you for a credit card or for payment in advance. So those would never be invoiced. The only ones that would be invoiced and are dependent on the closing of the work order are those that are for the commercial or multifamily 5+ units that would normally be billed. Those would be required to be closed before those work orders would be invoiced. So in order to take a look at whether they were completed and billed in a complete and timely manner, an accurate manner, we took a look at the work order number sequence. The soft pack system issues each of those work orders in a numerical sequence. So we asked for a listing, and based upon our review of the listing, we noticed that there were a number of gaps in the sequence. And based on further discussion with the staff, we noted that the reason, some of the reason for the gaps was because the staff have the ability to delete rather than void work orders. So if someone calls in and says, I'd like this bin rental, and then subsequently calls back and says, I've changed my mind and I would no longer like that service, we have the ability to delete rather than void. So they were able to generate for us a deleted work order report. However, because the information has been deleted, we don't know what service was requested or why the work order was deleted. We also noted that, similar to a lot of systems, the work order is assigned as soon as you open the work order system. So when a customer calls in and they sound like they want to request a service, we open up that work order screen. The work order number is assigned, and in the case that we don't use that work order will never be generated, or that number will never come up again. So that could cause also the the gap in the sequence order. So our recommendation was that that they implement controls to prevent the employees from deleting the work orders. As of the close of our audit, they had instructed employees no longer to delete the work orders, but instead to cancel them out or to zero out the dollar amounts. But they were working with the software provider to see if some system control could be put in place to prevent the employees from deleting. Also, what we took a look at is the open work orders. We took a look at, for our fiscal year, any work orders that were open as of August 16th. And what we found is that there were, August 16th, 2018, what we found was that there were some work orders that were open, meaning that work orders had been open and not closed for either the billable or the non-billable services. So basically, this is the report that we would take a look at to make sure that whatever services were being requested were being rendered in a timely manner, and also that we've closed the work orders for those that needed to be billed. In previous years, they had generated a open work order report on a routine basis. However, due to staff limitations, that task I guess, fell off of their priority listing. So based on our audit, we recommended that they make sure to review that, generate and review that report on a routine basis, and they've already started reviewing that report on a minimum of a bi-weekly basis to ensure that any services that are pending are closed timely. That completes my presentation for the refuse collection revenue audit. The Assistant City Manager and Public Works Director, Rubik Galanian, is here, and also the Assistant Director of Public Works, Dan Hargrove, and I are here to answer any questions that you might have.
Thank you. Questions?
Is there redundancy between the two software programs? Is there interoperability between the two software programs? And is it the intention to end up transferring to just a single program? And would the North Star be shifted to SoftPak as the newer system?
Actually, as the last recommendation or observation in our audit, we did recommend that they look at consolidating into actually the North Star billing system, which we use for GWP. And so they will take a look at it because we do have some redundancy in invoicing, not in the type of invoicing, but right now we use one third-party vendor that generates the invoices for our two different systems. So for the non-routine service, or I'm sorry, for the routine services that are billed through our SoftPak system for the bins that are reoccurring on a monthly basis, we recommended that they look at transferring those over to the North Star system. For those that are non-routine, that we do on a one-time basis or a non-routine basis, it's a lot of work to set up those vendors in our North Star system and the different billing codes. And because we collect those in advance, there really is no invoice going out for those. So they will take a look at consolidating the routine.
Thank you.
Questions?
I have a question on the inventory.
Mm-hmm.
So I see there was the reference one. I see the option there where there was a recommendation of the complete inventory for the containers, but do you happen to know a number as to how many containers did not match to the current inventory that you may have, or there's no inventory at all? Is that what it?
So we sub-selected on just the single-family residence because when you get into multifamily, it gets difficult because it's 64 gallons per unit. So we took a look. We sub-selected strictly the single-family residences that are assigned either 100 or a 64-gallon container. And there were approximately 28,000 accounts that we took a look at, and 882, or 3% of them, didn't have refuse container inventory assigned to them within the SoftPak system. But they did have an Excel spreadsheet that they maintained of those that didn't get transferred in. So we did take a look at that and noted that 70% of them were because the inventory was incomplete. And then there was 30% that just, there were some differences between the categorization of single-family versus multifamily. So our records either showed that it was a single-family resident in LA County, or a view of the location on the Google Maps would show that it was a multifamily residence.
Okay.
I have a question about deleting work orders. Why would any work order ever have to be deleted? Wouldn't there be an option to cancel out the work order and assign a reason why the work order was canceled?
That's what we requested them to do, and to take away the option to delete.
How many work orders did you find that were deleted?
You know, I don't have that number with me. I apologize. I can get back to you with that number.
Okay. I mean, do you have an estimate? Was it more than 10?
Yes, because it was their common practice to,
It was common practice.
to delete versus to void.
And then you said that once they're deleted, there was no way to see what the work order was, or what was being requested, or what, if anything, had been done on that work order.
Correct.
You know what? I'll ask you why, if we may. Who do we got here from? Good morning.
Good morning.
How are you?
Good, how are you doing?
I'm well, thank you. Why would work orders ever be deleted from the system?
Chair Amarian, the reason for deleting work orders would be someone who would, say, cancel a work order or a duplication. It's not something that would be any sort of activity that would actually take place. It's usually something that it was either redundancy from another work order or a cancellation.
Okay, so is there any reason, given the system and its the way it works, is there any reason in the future to delete any work orders?
Not at all, really.
Okay.
And in fact, we've already, just to update you, we have been in contact with the software company. They don't have the ability to stop that, take out the delete option, but through administrative procedures, we're going to be ensuring that we do not delete anymore, that we simply void them out.
Okay, wonderful. And you know, in the past, when work orders were being deleted, was there any discussion with the staff that was using that functionality about why they were choosing to use that functionality versus, canceling out a work order?
Yeah, I not to my knowledge. I don't know if we had those type of discussions.
Okay.
But we've corrected it.
Thank you.
Is there a projection as to any refunds given to overbilled customers? Because you stated here there's 71,000 of underbilled. I'm talking about like the ones that were overbilled.
They're potentially underbilled because, like we said, it would have to take a confirmation of the inventory to determine whether the inventory is correct.
Okay, and then the overbilled folks?
The same.
Same concept?
The same. We'd need to verify the inventory first.
And you said that will be completed by the end of September, right? Is that what I'm seeing here? September 30th, 2019, or is that? Because the billing side, I don't see a target completion date there, but I see a target completion date on the inventory, which is September 30th.
Correct.
So we probably won't see any information on this until 9 months down the road, probably?
Correct.
So it's not a high priority then, right? Just because it's not much revenue?
Actually, in order to do, like I said, we have 28,114 accounts for residential, and that's not including our commercial or our multifamily. So to do an inventory is going to be quite a process to accomplish. So we will have to get through that step first before we can before they can reconcile to the billing system and look at any overbillings or underbillings.
Do you have an estimate of what the total dollar amount is of underbillings versus overbillings?
No, we don't, because it is dependent on whether the inventory is correct or not. Because like we said, the majority of the ones that we located are based on missing inventory. But we believe, based on the Excel spreadsheet, that that inventory is out there. It's just a matter of getting it into our system.
Is one of the factors on underbilling or overbilling, are we saying that a property has 28 units and it has 26 64-gallon containers, or are there vacant units? Where does the discontinuity take place?
So the discontinuity that we saw is, for example, if you're being billed for a 100-gallon container, but actually at your property there's a 64-gallon container that has a lesser fee. For those larger properties that you're talking about, the multifamily, if you have 5 or more units, you will have a bin instead of 64 or however many trash cans or refuse
Thank you.
containers.
So at the end of the day, the customer's not really looking at their bills properly to see if they're underbilled or overbilled. They're not calling you guys, hey, change my billing because, you're overbilling me or something, right?
Right. So it could be accurate. But then again, like you said, I can honestly say I don't take a look at my refuse bill. I look to make sure
Yeah,
it's consistent
me
month to month, but I don't know what LA City charges for refuse collection. So if it's correct or not correct, I pay the same bill every month.
So I guess we're saying right now is, folks, look at your bill and call us if you're being underbilled or overbilled. Right?
Or don't.
Overbilled, yeah, don't call us.
Or don't. Okay, well, thank you very much.
Thank you.
Yeah, and we're not trying to trash the department. I mean, we just want to make sure that we're not being wasteful. So,
Wasteful, good term.
yeah, if I don't sneak a dad joke into the meeting somewhere. Okay, let's move on, please.
So the second performance audit we completed this past quarter is the administrative citations audit that completed by our internal auditor, Ani Antonesian. Ani has done a fantastic job on, she worked very hard on this project and has done a very good analysis on the effectiveness of this relatively new code enforcement tool. There are a lot of good information in this report. It's a long report, and Ani will cover as much as she could today, and then focus on the important issues. So with that, Ani.
Thank you, Josie. Good morning, Chair Marian and Audit Committee members. My name is Ani Antonesian, and I will be reviewing the administrative citations audit that was completed on December 31st of last year. The objective of this audit was really to assess the effectiveness of this new tool, and the audit was requested by CDD management. So what is code enforcement? It is the process followed when a complaint is received about a potential city code violation, which prompts an inspector to go out there and see if it's a valid violation, and often at a private or commercial property site, and use various code enforcement tools to achieve code compliance. There are various codes that the city enforces, such as in the categories of housing, licensing, zoning, building. Now, I'd like to go over quickly the timeline of code enforcement and the processes used in the city. So first, there was the notice process. And that was literally just notices given. It was just for your information. Notices given one after another to remedy code violations. And there was really no punitive fines associated for remedying anything. But then in 2013, the city added a chapter to the Muni Code, allowing for citations to also be given for code violations, and this eventually resulted in about 500 codes being listed in the citywide fee schedule, and that's not a comprehensive list of all the codes that could have associated citations. And these fines range from $100 to $2,000 for each violation. And in 2014, then, this new process started, which has those two associated forms with it. And it's a major change from the notice process because that punitive fine can be assessed, and if not remedied, those forms are used instead of those longer notice processes, which provide more room for inspectors to list the detailed violations and the remedies. Just a side-by-side of the two processes here. So again, the major differences are that a warning notice can be given initially to warn the code violator that, you have 30 days to fix this situation. And if that's not effective, an inspector can choose to cite for that violation. And the rest of the elements of the two processes are, the same. There's the initial inspection. An extension can be given if it's a particularly, again, at the discretion of the inspector to remedy the violation. And both processes have re-inspection. So every time an inspector goes out there to re-inspect, there's an associated fee. I believe currently it runs at $371 per inspection. And if the case, either process is ineffective, it's referred to the city attorney's office for further legal action. I'd also like to mention that the city doesn't wholly manage the administrative citations. There is a vendor that processes the citations for the city and collects payments on behalf of the city. And the vendor is also responsible for sending delinquent citations to the city's collection agency once its attempts at collecting payment are unsuccessful. So to analyze the effectiveness of this new tool, we really had to understand how these two processes work in reality, right? And this is a very simplified flowchart of the two processes. So once the complaint is received, there's that initial inspection, and there's, so to say, a fork at the road, right? If a ticket can be given for a violation, it can potentially follow this new process. But if none of the violations are on the schedule, so there is no associated fine, it has to follow the old process, the notice process. And although this is what the procedures show, we found that in practice, these two processes aren't followed exactly. For instance, an inspector may come across a case that has all citable violations, but for whatever reason, the ICP process may not be followed. Like the inspector may choose not to cite for a given violation. For scope, we looked at, for the past 9 years, code enforcement data that the city had available in the permitting system, and we also reviewed vendor records for those cases that had citations. The methodology to carry out the audit was, reviewed relevant documentation, key performance indicators. We interviewed many city staff. We gathered and analyzed data from the city attorney's office, the vendor, the collection agency, and reviewed city's financial records on citations. The test work also involved formulating and analyzing a data set based on raw code enforcement data. And that also has associated assumptions and limitations that I'd like to cover next. So to assess for the effectiveness of this new tool, as I said, we took a data-driven approach. And when we first took a look at the data, we saw thousands of code enforcement cases, one after the other, But there was no way for us to know which process was each case following. Just when the case was open, when it was completed, and the violations for that case. So in order to make a comparison, we had to tag each case. And those are some of the assumptions we made, is we put them in buckets of, the new process, administrative citation process, the old process, and those cases that had both citable and non-citable violations, we put them in the mixed process case. We also had to normalize the caseload data, because a case can have one violation, it could have 20, right? So to make really that apples-to-apples comparison, we decided to cap it at 3 violations. And another reason for that was 93% of the entire cases that we looked at for the past 9 years had up to 3 violations. And the last thing, how do we judge whether it's effective or not? In discussion with management, we came up with 2 trends. The trends related to case compliance rates and whether the cases that are being referred to the city attorney's office, whether they're trending down or upward. So before we get into some of those trends, I'd just like to note the certain limitations that pertain to the data analysis. The processes haven't been followed consistently. And as we'll see in the next slide, although there is a trend upward for case compliance rate, there could be other contributing factors, right? The economy could be doing well and people could be remedying these violations at a quicker pace. This new tool itself hasn't been used consistently across all of the violation categories. So for instance, it has been used more for licensing versus, building code violations. So that kind of also skews the data. And finally, the data itself was not 100% accurate, consistent, or complete. So this is the first trend we see, is that the overall case compliance rates are trending upward. And from 2014, that's when the new process was introduced. That's when you see the trend up. And the second one, this is broken down between the old process and the new process. And these are all of the violation categories that we kind of group them into, general violation categories. And as you can see, some categories, like general municipal code violations, housing and licensing, have a bit of a higher trend toward the end than building and zoning violations, but still there is a trend up. And these are the trends for the cases referred to the city attorney's office for legal action for the past 10 years. And the process was introduced in 2014. So if you compare the numbers to the 2013 levels, it doesn't quite reach up to that level. And finally, this last one shows for the past 4 years, the new process and the old process have been used concurrently. And what we see here is that within that first month, the new process has a higher rate of compliance. And that we can attribute to that warning notice component, where, it's not necessarily that, they're going to, the citation has an effect, but that warning notice is a threat enough to nudge people to comply. So the recommendations for this effectiveness part of the audit was, although we observed these trends, we cannot make a conclusive determination about the effectiveness of this new tool compared to the old one, because the process hasn't been followed separately from the old process for all cases. So we recommend that CDD management enforce this new tool for cases that involve all citable violations, and consider moving all code enforcement cases to the new process and only use the notice process on an exception basis to streamline the overall code enforcement at the city, and also improve data quality for tracking cases based on process type. Next, I'd like to go over the audit result highlights for some policy and process improvements. So, specifically, we observed that the current procedures allow for a limited use of the ACP because, as I said, only not all codes can have citations, and so there are also no clear guidelines on how to enforce mixed process cases. So clarifying within the procedures on how to enforce those cases. Next, we observed that although there are established procedures for this new ACP process, it hasn't always been followed. So the recommendation is to clarify how to follow this tool more clearly based on how many violations there are in a case, how many citations can be given on a case. And finally, those forms that I showed you, with the new ones, they're smaller than the old process, and we've heard anecdotally from inspectors that they don't provide as much room to explain the violations themselves. So a recommendation is, to redesign the forms themselves, perhaps to alleviate space concerns, to make maximum use of this new process. And lastly, we also observed some improvements that can be made on the management of the citations itself. As I said before, there is a vendor that processes the citations, but the city doesn't comprehensively track them, and so the recommendation is to track them electronically and reconcile them with vendor reports. We also found some instances of double payment that was made to the vendor and the collection agency. So work with the vendor to manage those. And there were also just double payments made to the vendor, and so those need to be taken a look at closely. And finally, the referrals to the city attorney's office. We found some discrepancies on case status between their records and CDDs. So a case could have been closed on their side, but it was kind of open. So the recommendation is for the city attorney's office to provide periodic updates to CDD to reconcile those statuses. Finally, we noted 11 observations in total, with 3 in priority 2 and 8 in priority 3. We also identified 1 innovation opportunity. And that concludes my presentation. I am happy to take any questions you may have. Also present are Peter Zovac, Assistant Director of Community Development, and John Brownell, Principal Supervisor of Neighborhood Services. Thanks.
Thank you. Questions?
2 questions. Has anyone requested the city attorney or appropriate department to analyze whether non-fine attributed violations have a fine because we're losing income where there should be income, or why some violations are violations but they have no comparable fine attached to them? Either you're following the code or you're violating the code. So that seems to be a missing facet, to not have a fine connected to it. Secondly, are these only violations in response to a complaint, or are there any periodic checks that happen, or is there a particular emphasis on when there's a change of zoning, when we're building one of our large, as I call them, Borg cubes, these large square monoliths we have in town now, if those have a particular inspection regimen because it's such a change in that particular piece of property?
To number 1, Peter and John may have a better answer for that. I don't know if there's been an analysis done by the city attorney's office. But to your second question, there are no periodic inspections to my knowledge. It is based on a complaint-driven basis. So once a complaint is received by mail or by phone, that's when an inspector goes out there for these specific code violations.
So it would be, if there was a reason to consider having either periodic at some point, or when there are major changes in zoning, or when there's a new plan adopted for a section of the city, that would be us requesting you to get back to us, and then for us to recommend to the city council that they might in fact adjust the procedures for the city?
Right.
Thank you.
I have a question in regards to reference 1. It's your administrative citation. I see the notes you wrote there, but on your audit, was there an audit done on missing citations? Because there's a...
Yeah, so the void citations, yeah, we looked at those and we didn't see any control issues on that. They can be voided for a variety of reasons. It could be a financial hardship, or it's a unwarranted citation, or it could have been given to the wrong owner or the address. So they're voided for those reasons.
All right, and then also on the warning notice, I see you on reference 9, you did a recommendation of updating the form. Was there any recommendation on that one to actually add a stamp number sequence in there, so that way, you can keep track of the ones that were voided as well?
Yeah, I think the CDD keeps a hard copy of the voids. So your suggestion would be to
Numeric, just like the administrative citation, it has a number sequence up here already. Yeah. So that way you can track of the missing ones in case you're like, oh, let me just throw some in the trash,
right,
instead of turning it into the department still, right, and at least have it as a tool to make sure you have all of them,
Of course, and we do have a recommendation on that to keep a track of the voided citations electronically as well. And the vendor also keeps copies of the voided. You can run voided reports to the vendor as well.
Can you just briefly explain what the vendor's role is? I mean, at what process does the vendor step in?
Right.
At what point in the process does the vendor step in?
Right. So that when the citation itself is given, an electronic copy is scanned and emailed to the vendor, at which point the vendor takes that citation and processes it, and then we can see it on their, management can see it on their vendor reports. And they also send out notices. So they send out 2 notices to collect payment from the code violator. And whenever they receive revenue, the city has a joint account with the vendor where we process those payments. And that's pretty much all they do. They don't do anything in terms of managing the process or the citations.
So the vendor is simply sending out notices before it's sent to collections?
Right. Yes, and they're also they also per the city's direction send any uncollectible fines that they could not collect to the city's collection agency.
And how does the vendor get paid? Is it a flat fee or is it a percentage of the citations?
So there's a standard PSA that the city has with the vendor. So there's that cost, and there's also a standard $22 per citation processing fee, and they also charge anytime there's a hearing associated with contesting a citation.
How many staff members are in that department that actually out there issuing citations?
I think we observed those numbers. There were kind of roughly around 10 inspectors. Yeah, so it was.
And out of the 10 inspectors, is there a consistency in the number of citations they issue, or is there some sort of trend? I'm just inquiring based on, one inspector could have done 5, another one could have done 20. Is there any analysis on that or no?
We didn't really perform a staffing analysis. It was kind of not in the scope of this audit as to, what is the citation issuance level per inspector. And I don't think it's, you could even do that through the data. It doesn't necessarily track that.
Well, there should be a signer, and you could see, I'm assuming, for example, in the staffing scenario, I mean, you'll be able to track exactly what staff members out there issuing the most citations, and the one that's not doing it at all. Just curiosity for me.
Okay. Well, if there are no further questions, thank you very much.
Here's your forms.
Thank you.
Thanks for the visual.
Okay, let's move on to item 6B.
Six B, Comprehensive Annual Financial Report, CAFR, and report to the Audit Committee from Vavernick Tri-Day and Company. Sujin Lee, Deputy Director of Finance.
Good morning, Chair and committee members. My name is Shujing Lee. I'm the Deputy Director of the Finance Department. I'm here today to present you the city's comprehensive annual financial report, in short CAFR, for the fiscal year ended June 30, 2018. I will talk about the timeline of the CAFR preparation, the CAFR structure, and the city's cash balances and the net pension liability. I will also talk about the audit results for the CAFR, the single audit, and the SAS 114 letter. At the end, I will introduce Mr. David Showalter, who is the engagement partner from the city's external auditing firm, Vavernick Tri-Day and Company, in short VTD, to do his required communication to you. First, I will briefly walk you through the CAFR preparation timeline. For the fiscal year 2018 audit, the VTD staff came to the city for 2 weeks in May to do their preliminary field work. And then we worked with them to send out the confirmation letters in September. And then in October, they came back again for 1 week to do the single audit major grants testing. And on the other hand, the accounting staff from June to October were busy trying to close the book of June and also processing all the year-end transactions and then also prepare the CAFR. And the first draft of the CAFR was completed in the middle of October. At that time, the VTD staff came back for another 3 weeks to do their final fieldwork and do more testings. So between the middle of October to the end of November, there were constant communication between the VTD staff and the accounting staff to finalize the CAFR. And the CAFR was completed at the end of November when the city received the opinion letter from VTD. Then we worked with graphics to print the CAFR and present it to council on December 11. Next, I will talk about the CAFR structure. So the CAFR has 3 sections: introductory, financial, and statistical. So the first section, introductory, includes the transmittal letter, city officials, and the org chart. And the financial section includes the auditor's opinion, management discussion and analysis, fund financial statements, notes, and the required supplemental information. And the city's fund financial statements are presented in a CAFR in a top-down sequence. And the city has over 60 funds in total. And the 2 most consolidated government-wide statements are presented at the beginning, and then will be the major funds, non-major funds, and internal service funds. The major funds, by definition, is the funds that has the most significant transactions, such as the city's general fund and electric fund. And non-major fund, on the contrary, has a lot less transactions, and most of the city funds are non-major funds. And then internal service funds are used by the city to centralize certain services and then allocate those costs of the city services to the user departments, such as fleet and insurance services. And then the last section is the statistical section, which presents 21 schedules in 5 categories. So the 5 categories are financial trends, revenue capacity, debt capacity, demographic, and economic information, and then also the operation information. Most of these schedules have a 10-year history or compare the current year to the 9 years ago history. So give the readers a lot more details on the timeline-wise. And the next 2 slides will give you the city's financials in a snapshot. Slide 9 is the statement of net position, which is like the balance sheet. As of June 30, 2018, the city has almost $1.6 billion in net position. Slide 10 is the statement of activities, which is like the income statement. In fiscal year 2018, the city has an increase of $41 million increase in the net position. Slide 11 shows the cash balances of all funds. And the general fund has over $100 million in cash, and the whole city has a combined of $806 million in cash. I think this went out of battery. And slide 12 shows the city's net pension liability. So under PERS, the city has 2 plans, miscellaneous plan and safety plan. So the miscellaneous plan has $296 million in the net pension liability, and the safety plan has $284 million in net pension liability. Combined together, the 2 plans have $580 million in liability. And the next slide shows the sensitivity of net pension liability to changes in discount rate. So if the discount rate decreased by 1%, the city's net pension liability will increase to $846 million. On the other hand, if the discount rate increased by 1%, the net pension liability would decrease to $363 million. And one of the major GASBs that the city implemented into fiscal year 2018 is GASB 75. GASB stands for Governmental Accounting Standards Board. GASB 75 sets the guideline for accounting and financial reporting for post-employment benefits other than pensions, in short, OPEB. So GASB 75 requires the city to report a total OPEB liability on the book, which is $15.7 million for Glendale. And I'm happy to inform you that the city received unmodified opinion for both the CAFR and the single audit for the fiscal year ended June 30, 2018. Single audit report is required for all government agencies who spend more than $750,000 in both direct and pass-through federal grants in one fiscal year. And then for the fiscal year 2018, the city received one recommendation from the auditor for the single audit report, which is for the Section 8 grant. So the recommendation is some housing assistance payment check registers were not being properly approved, and the city agreed with the recommendation, and we have already taken actions to correct the situation. And the city also received a SAS 114 letter from VTD. SAS, SAS here stands for Statement on Auditing Standards. And SAS 114 letter is a required communication letter for all financial statement audits. So basically the letter described how the fiscal year 2018 audit is, and the conclusion is the audit overall is very good. Between the city and the auditor, we have a very efficient and smooth audit. And then next, I'm going to invite Mr. David Showalter to do his required communication. Unless you have some question for me or you want to wait until his presentation is done.
I'm good.
Let's move on.
Good morning.
Good morning.
My name is David Showalter with Vabernick Trine Day. I handed out a handout for you guys to work through a little presentation for the results of the audit for 2018. Shujin kind of did a really good overview of the audit process, and so I'm not going to repeat a lot of that. So just kind of going through the slides, a lot of this does tie into our required communications letter, but I wanted to kind of provide something that was a little easier for you to read. So the first slide just reiterates our responsibility with the audit, and under generally accepted auditing standards, we have a responsibility to plan the audit in order to obtain reasonable assurance whether the financial statements are fairly stated in all material respects. That process, as Shujin mentioned, kind of starts back in May, where we're working through the internal control understanding and going through the process of designing our audit procedures, and then performing various tests of compliance, and ultimately getting to the point where we're opining on the financial statements. That's where we come back out in the November timeframe. Management has prepared the financial statements. We work through the process of reviewing the financial statements to make sure that they are fairly stated in all material respects, and then we work through also reading a lot of the other supplementary information. As you can see, the document that the city prepares is a very lengthy document, and within that document there are certain items that we opine on in the CAFR, and then there's certain items that we don't opine on. One of those items is management's discussion analysis in the CAFR document. That section of the CAFR, the management's discussion analysis, is a great area to look to determine, what were the more significant transactions that occurred during 2018, and it does provide a comparison to 2017. So we do spend some time reading that information just to make sure it articulates back to the financial statements. But we do not opine on that information just because there is some forward-looking information, and it does have management's assumptions in there that are not auditable in some cases. The next slide gives you the results of our audit. So the scope of the audits for the city include the comprehensive annual financial report, which is the large document that you have there. We also audit the standalone reports for the water and the enterprise and the electric enterprise fund. In addition to the single audit, there's also a JPA audit that we perform, and then we also do a GAN limit agreed upon procedures and the National Transit Database agreed upon procedures as well. So the results are in the right-hand column. For the CAFR, it was an unmodified or a clean opinion with an emphasis of matter relating just to the implementation of GASB 75. For the water and the electric fund, again, those were also unmodified opinions with an emphasis of matter of just letting the reader know that these are fund financial statements, and these do not represent the city as a whole. And then the single audit was an unmodified opinion. The other JPA was unmodified, and we had no exceptions with respect to the agreed upon procedures. And then our required communications, you have a copy of the letter, I think, in your packet. This is just really going through a summary of the same items that are in the letter. With respect to significant accounting policies, when we do provide our required communications, we comment on whether there were any significant accounting policies that changed from the prior year. We did have one item with respect to the implementation of GASB 75 and the city recording the OPEB liability on its financial statements. That liability as of June 30, 2018 is $15.7 million. Currently is 0% funded, so it is just basically a liability that doesn't have any assets offsetting it at this time. Management's judgments and accounting estimates, our responsibility with the audit is to identify those significant accounting estimates that are included in the financial statements and perform procedures to ensure that those estimates are reasonable in all material respects. I've listed out the more significant accounting estimates that are included in the financial statements, including fair value investments, data collection to comply with period availability for certain revenues, self-insurance reserves, depreciation, net pension liability, and the other post-employment benefits liability. Each of those areas, either management performs those estimates internally or they hire consultants to help them, especially with the actuarial services that are provided to them for the self-insurance reserve liabilities, the net pension liability, and the OPEB liability. On the next slide, we have the sensitive disclosures. I know that Shujin kind of went through these already with you, but primarily sensitive disclosures still pertain to the net pension liability and the also with the OPEB liability, but especially with the net pension liability and that sensitivity analysis where we see the discount rate going up and down 1% and what significant impact that has on the city's financial statements. And so the GASB requires that sensitivity schedule be included within the financial statements. On the OPEB, we also have a very similar sensitivity schedule that GASB 75 requires to be included. Again, the OPEB liability is predicated on various assumptions, including a discount rate factor. In addition, there's also the healthcare cost trend rate that's also somewhat baked into the liability. So any changes in the healthcare cost trend rate could also have a significant effect on the OPEB liability. So there's a sensitivity table in the CAFR in Note 10 that also gives the reader some perspective on if those trend rates go up and down 1%, what would that look like to the liability. We're pleased to say there were no corrected or uncorrected misstatements as part of the audit, and there were no difficulties with the audit. There were no disagreements with management. As far as we know, management did not consult with any other accountants with respect to the audit. There were no other audit findings or significant issues that we needed to bring to your attention. And with respect to the manager representation letter, the letter was dated November 30th, 2018, that management provided to us. And then as part of our audit, there are other audits that we perform, including the single audit. And so in the single audit, again, as I communicated earlier, it was an unmodified opinion, so there were no compliance exceptions with respect to the single audit. We did have a control finding with respect to the single audit that dealt with 4 housing assistance payment registers that we selected for testing did not have evidence of a review or approval. And then I included management's response in your handout there. Management takes responsibility for that and is already putting in the corrective action. And in the single audit document or the report, they've indicated that the date of correction would be, I believe, in the end of this month or February 2019, that the corrective action would be in place. So when we come back next year to do the audit of the city, we will circle back to just ensure that the items have been corrected. With respect to the single audit, there is another document that's at the very last page of the single audit report. That's a summary schedule of the prior year findings. And if you recall, last year we had a few findings that we did communicate. We're pleased to say that all of those findings have been corrected or implemented for 2018. So there are no carryover or no repeat findings with respect to last year. And then just on the new accounting pronouncements that were implemented in 2018, just as a summary, GASB 75 was effective this year. That was implemented. There were 3 other standards that were also effective for the city, but did not have a material effect on the financial statements just because they didn't have any applicability at this current time. And then looking ahead, there are several new accounting pronouncements that will be effective in the coming years. Next year, we have Accounting Standard 83 dealing with certain asset retirement obligations. So basically, this is defining what an asset retirement obligation is, which is a legally enforceable liability associated with the retirement of a tangible capital asset. That is one that's permanently removed from service. So the city has lots of tangible capital assets and lots of assets that potentially need to be looked at to determine whether if there's going to be a liability associated with removing those assets out of service. You can probably think of a few in your mind, maybe related to the electric utility. So one of the things that the city is working through that process is just identifying what those assets might be. And then ultimately, if those assets are still in use, but then at some point when that asset is retired, maybe in the future, if there's a liability associated with placing that asset out of service, that liability needs to be accrued for now, today, and then it's basically accumulated over time until that asset is retired. And that also holds true with assets that are being currently constructed. If there would be a future retirement obligation with respect to those assets, the liability should even be recorded even before it's placed into service. Looking ahead, GASB 84, dealing with fiduciary activities. This is just in the city's financial statements, they have a section in their report where they have fiduciary funds. So this accounting pronouncement pertains to those types of funds, just providing some consistency with reporting those types of funds. GASB 87 deals with leases. So currently we have an accounting standard where we differentiate between a capital lease and an operating lease. And so an operating lease, we might be aware of that we don't have to book that onto the balance sheet. It's kind of an operating expense type lease. And then a capital lease is where we're essentially borrowing money in order to finance the cost of an asset. The lease standard will require that all leases be recorded on the balance sheet along with an offsetting right-to-use asset. So this is going to require the city to go through its lease inventory, especially dealing with like real estate and maybe even its equipment, and going through that process of determining what the inventory is, and then essentially building out amortization schedules for each of those lease agreements, and then going through the process of determining what are the probability factors of extending those leases, ultimately to come up with a net present value of that lease, which would then go on to the financial statements as a liability with an offsetting asset or a right-to-use asset, and then it would get amortized over the life of the lease agreement. That's slated for 2021, so we have a few years ahead of us to get prepared for that one. GASB 88, dealing with certain disclosures related to debt, including direct borrowings, direct placements. So the GASB recognized that there was some disparity between how entities were reporting certain bonds that they're issuing with a direct placement, or maybe a bank decides they're just going to be the sole purchaser of a bond instead of it going out to the public for sale. So the GASB decided that they want separate disclosure of those instances where maybe you do a refunding or you issue a note directly to a bank, and then the bank is the one that basically holds that bond directly. They want separate disclosure from your other types of debt. In addition, they actually provided a definition of debt, which we've never really had in accounting guidance before. And basically, the definition of debt is defined as a liability that arises from a contractual obligation to pay cash or other assets that may be used in lieu of cash in one or more payments to settle an amount that is fixed at the date of the contractual obligation is established. So this type of debt would be different from an OPEB liability or a pension liability, because a pension liability isn't fixed. It's actually kind of a floating liability, if you want to call it that. So now we have a definition of debt that can then be distinguished between other types of obligations or liabilities that a organization may have on its financial statements. That'll be effective next year as well. And again, it's going to be facts and circumstances with respect to the city as to whether they have any items that fall into the direct borrowings or direct placements category. And GASB 89 deals with accounting for interest costs incurred before the end of the construction period. So Under Financial Accounting Standards Board, and then the GASB adopted the standard about 5 years ago. When you're constructing an asset and you're incurring interest on debt that's financing the cost of that asset, you would basically capitalize that interest during the construction period. The GASB went back and looked at this and said no longer do governmental reporters need to capitalize the interest. So that's basically going to eliminate the need to capitalize interest on constructed assets. And then lastly, on GASB 90, dealing with majority equity interests, just provide some guidance on looking at those types of entities where a city may have a majority equity interest and going back and reevaluating it to ensure that it's included in the financial statements properly. So lots of new accounting pronouncements coming up. I think the more significant ones deal with lease accounting, where the city may need to really start the process of looking ahead and working through that process. And then the asset retirement obligation, I think, is probably one that's real critical. And I can think of a few areas in the city where we're currently working through some very large projects and maybe looking at possibly doing some retrofit or maybe even making some decisions to take assets out of service. So, but anyways, any assets that are tangible within the city that potentially could have a liability associated with it, and that liability would be something where there's a legal obligation to incur some sort of a cost to take that asset out of service, and not necessarily. We know that potentially there could be a cost to pull an asset out of service, but ultimately we're looking at those significant ones where there's an external party imposing a compliance on whether it's through health and safety or whether it's through law or maybe state code requiring some sort of action to take place. The GASB uses things like nuclear decommissioning. So nuclear plants that are decommissioned, there's a whole process that goes through of disassembling those reactors, and there's a huge cost associated with that. So that's at the highest level, but you can think of something at a more smaller level that potentially could have an effect on the city going forward. So overall, the audit went very well this year. We were able to get the audit done right before the end of November, which is pretty consistent with last year, and make the council meeting in December. So I want to thank Shujin and her team and for all their hard work. I know that Shujin starts the audit basically in January of every year, and working with us to make sure that we're on task for the scheduling, and she does a really great job of driving the audit and making sure things get done on time. So we appreciate everyone in the finance department's hard work, and even going through the process of a system implementation. On top of all that, they were able to get the audit done on time. So we appreciate it. Any questions?
Thank you. Questions?
On Gatsby 87, are retrofittings treated differently than replacement? Or is retrofitting considered to be a replacement because they're making structural changes within a capital asset?
Are we talking about GASB 83?
I was looking at 87, but maybe it's 83.
83 dealing with asset retirement obligations? Yeah, that's when you're taking an asset out of service completely.
Okay, so 83 would deal with if you're replacing an asset with a new asset.
Or just taking it completely out of service.
How about retrofitting, where you're still maintaining the asset, but you're
That would be a betterment, or that would be something where you're extending its useful life. So there's already accounting standards that deal with that situation.
Thank you.
Yeah.
I mean, what are the big things? Transformers,
Well, I
fleet
think
services, maybe?
I think the thing that we would probably look at as we look towards the Grayson repower is taking some of the units offline and any pollution remediation, that may be any ground contamination, all those types of obligations. Obviously, we have to remove it to put in new, but anything that we have to do for groundwater or some other sort of pollution remediation would be probably an example of what we would look at. If I may, I might add, the same night we presented the CAFR, just for the committee's knowledge, the council agreed to bring VTD back for a 6th year. Normally, we RFP after a 5-year cycle, but because we're in the middle of a system implementation, went live a few weeks ago, we thought it best to maintain our current audit. And once we're done with this next year, we'll do a full-blown RFP and hopefully have at least one member from the committee when we review the various firms that make the final cut. So just FYI.
One last question. Are we anticipating, and maybe this is looking forward to next year, I know that they're considering major changes in Burbank because of the bullet train, if it does or doesn't come out, having a more consolidated metropolitan transit system, as well as discussing some sort of rail system between Burbank through Glendale to Pasadena to tie into the goal line. Is there any anticipation of major structural change in our transit station for that, or is it all being handled across the top of the city?
I have no idea.
Okay, then.
Ruben can speak to that.
Thank you.
Any other questions for me?
No, thank
Okay.
you so much.
All right, thank you.
Appreciate it, and we'll see you this year as well.
Good morning.
Good morning.
Chair Armenian, members of the commission. We have been in frequent conversations with Metro and high-speed rail folks. As you noted, it's may or may not for high-speed rail. But as for the east-west connection, we have actually proposed up to 2 new stations between Glendale's train station, Larry Zerian Station, and Burbank Airport. But all of
And
these
I
are
think I'll stop you there because I'm not sure this is, actually, I'm fairly certain that it's not pertinent to the current item.
It
But I
isn't.
appreciate the answer.
And it
Yeah.
isn't agendized, so I would caution you to limit your response in
Yeah.
time.
No, thank you. Yeah, appreciate it. Yeah.
Now, if there was asset replacements involved with that, we could probably.
Yeah.
I just want to make one comment.
Go for it.
So just want to, VTD for your hard work and effort for the Excellence Award that you guys got, City of Glendale Finance Team and the Audit Team for this amazing report that one of these days we'll probably go from page to page and read it all, but it's fantastic. I mean,
Late night reading.
yeah, actually I was enjoying some reading yesterday on this and it put me to sleep. But it was good though. But thank you for all your hard work and effort. The city giving us actually very good information here that if folks in the community actually look at it, they can have a lot of answers here already. Thanks.
Likewise, thank you very much.
Thank you. I'd like to, this might require the input of Ms. Barbedian. I'd like to actually reopen 6A and go, kind of finish off a few of the things that we left unfinished. I thought, just given time, we should move. Would that be okay for us to go back and open 6A?
We just need to read it back into the record.
Fantastic. So I'd like to move back to 6A, and thank you to Vavrnik Trine Day. Appreciate the work that you do. 6A, please.
6A, Internal Audit Activity Report as of 12/31/2018.
And-
Bessie Zhang, Internal Audit Manager.
Thank you. And Ms. Yang, I believe we were on number 3, and I'm sorry that I jumped the gun on you there, but I thought maybe we could get to the CAFR and the single audit, and then come back to and finish the internal audit activity report.
Okay, thank you. I felt a little left out earlier, so
I
thank
didn't
you for
forget.
bringing us back.
Sure, you're like,
Yeah.
yes, we skipped it.
So actually, we finished the first section, which is the completed audit project, and the second section is project currently in progress. So so the report is uploaded on the big screen, so you can see it. We listed one project currently in progress. This is the Glendale Police Department Property Room Inventory Audit. The objective of this audit is to determine that we have adequate controls in place over the property inventory to ensure properties are properly recorded, packaged, safeguarded, and disposed of. Our senior internal auditor, Samil Salim, is currently working on this project, and this will be completed within the current quarter. So you will hear about it at our next audit committee meeting. So the next section is continuous auditing project. So this past quarter, we issued one memo to Information Services Department, ISD. So this is on the Active Directory user access control testing. So then, since the memo was issued, we've been meeting with ISD multiple times to make sure that they address the exceptions we identified before our next run, so that we don't see the same outliers and exceptions again and again. So the following three sections, number 4, 5, and 6, are all related to quarterly follow-up activities. So for this past quarter, internal audit conducted follow-up on a total of 81 audit issues. 21 of them are actually from the two reports that you just heard about. And then so 6 of them have been implemented, so that leave us with 75 outstanding items at the end of the quarter. So the next section is actually a highlight of the priority 1 audit issues. So we have a total of 4 outstanding audit issues with priority 1. One is from the homeless program operations audit. We have 1 from Fire Prevention Bureau operations audit, and 2 from the recently issued refuse collection revenue audit. So all of them are still within the anticipated completion date. So, and the next one, police chief left, but it's the outstanding other issues that are meeting certain discussion criteria. This is as a result of passing the resolution number 2 by this committee. So the 3 criteria that that we would invite the directors from the department to come to the committee meeting and explain the reason why the audit issues either not implemented or after 2 years still haven't been implemented. And then the third one will be after 3 years, then we'll stop conducting follow-up activities. So for this quarter, there are 4 items that are meeting the second criteria, which is have not been implemented within 2 years of the report issuance date. So all 4 of those are from this one audit, Grant Administration Limited Review. This audit was completed in November 2016. So basically, the original anticipated completion is about right now. So it's 6 months, about 6 months ago, and then it's due to the little delay of the Munis implementation. So that's basically the trigger for the staff completing this implementation. It's after the implementation of the Munis system, and then finance staff will come up with citywide grant management policies and procedure, so to bring it more centralized. And then at the same time, each department who receive grants will still have their specific, policies and procedures that related to that industry or that specific grant. So that's why we have fire department completed their internal policy procedures, and the police is still in the process of, establishing the policy procedures. And then finance, but those will not be implemented until finance has this overarching citywide centralized grant management procedures. So if you have any questions, Bob is here to answer them. Let's see.
So
Then-
the Tyler Munis financial accounting system is currently still being implemented?
We went live January 2nd.
Okay.
We're still working on the bugs, but our goal is by the end of June to have the grant module up and all put together and giving us the tool that we can to complete this task.
Fantastic, thank you. Okay.
Then last part is just our ongoing team assignments. This is the two committees that internal audit is serving on. So one, the investment policy advisory committee, basically the members meet quarterly, and then the other one is we meet every month. And then internal audit is serving on these committees as a formal member, but not non-voting member. So that's pretty much concluded this quarterly activity report.
Very good. Thank you very much. We tabled the approval of the minutes, but since we do not have the number of members here in order to approve those minutes, I think we have to move it to the next meeting. And that's the minutes of the Special Audit Committee meeting held on October 29th.
Certainly, we can move it to the next meeting unless Mr. O'Shaughnessy says that he's reviewed the videotape and can attest to the accuracy of the minutes.
Mr. O'Shaughnessy?
The commissioner would rather abstain because to approve minutes, even reviewing a tape that one was not attended to, seems inappropriate. So you'd still only have 2 votes. So I'd rather we refer it to the next meeting when we have at least another additional attendee at the actual meeting.
Sounds fair.
Okay, let's do that. Let's move on to item number 7.
Number 7 is audit committee or staff comments.
I'd just like to thank staff and Vavrnik Trianaday on behalf of the audit committee. A tremendous amount of work goes into, we joke about it sometimes, but a tremendous amount of work goes into producing these documents. And there is a great amount of information for the public and anybody who's interested in it. It's something that we appreciate here, and as somebody who believes in accountability and transparency and innovation, I think that our finance department and our audit department are doing a great job in meeting those standards. So thank you very much for putting all of this together for us. Any comments? Okay, let's move on. Oh,
I don't know
Mr. O'Shaughnessy.
if it fits here or under new business, but I mentioned if there was a way for us to see if the city attorney or other department should look at those violations when we discussed that particular report that had no attached fine to it. Is the appropriate action for us to refer that to the next meeting of the committee so that we can get a reply back as to whether it's our purview to consider what actions might be taken so we can refer it to the city council?
I'm a little unclear on you're asking about the citations audit?
Yes.
And you're asking whether or not we have purview over suggesting course of action for items in those that currently don't have a fine associated with them?
Correct. If we're concerned with the economic health of the city with all the variations that happen, it seems that either something is a violation that should have a fine or something should no longer be considered a violation. I don't understand the rationale for having a non-fined violation. So, but I don't think that's something that you can answer without it having been posted on the agenda. And wouldn't that not be an appropriate item of business at the next committee meeting?
Mr. Chair and committee member, I believe that we do have a recommendation that address your concern. It's basically, as Ani indicated, that we have these citable and non-citable violations currently. So then one of the recommendations we were given to the department is to explore whether all the violations can be made citable, so then we won't have this issue. So that is part of the report already.
Then thank you. Asked and answered. That's delightful. Thank you very much.
Thank you.
Thank you. Moving on to number 8.
Number 8 is new business.
I have no new business and see none. Actually, I'm going to take that back real quick. I do have a question about starting the meetings without a city attorney present.
All you need are 3 committee members.
Very good. Thank you
The
very
rest
much.
of us are dispensable.
Very good. No, stop, please. Very good. Number 9. Number 9, adjournment.
Second.
We are adjourned.